This is the President McCormack Podcast with your host, Mark McCormack.
Ladies and gentlemen, Mckay Dunn. Welcome to the podcast, my friend.
Hey, thanks for having me.
It's only friends I have on here. You know that, right?
Exactly. That's this first time on a podcast, dude.
Oh, this is your first one? Oh, that's right. You were texting me yesterday. I forgot. Yeah. I was driving when you were texting me. If you're wondering why I was giving you like the freaking...
Yeah, really intimidating.
Yeah. Is it really?
No, it's pretty cool, actually.
Yeah, I was going to say.
Never seen it. You never see how it's like really done.
Yeah.
But this is cool.
Yeah. Have you been in my office yet?
No, I've been there.
So I set up a full-on podcast studio in there. 4 mics, 9 yards. I bought Joe Rogan's exact equipment list.
Does he sell a kit?
Oh, dude. And it was like, I was probably like, I don't know, 12 to 15K into it by the time it was all said and done. And I had some people trying to help me like set it up, and we could just never figure it out. I mean, I have a server. I have like all sorts of garbage, basically, right? And then Jimmy Rex, this is his studio.
Yeah.
And he just did I was listening to one of his podcasts one time, and he just said, hey, if you ever want to record at Rookery, come on down, blah, blah, blah. And I was like, I wonder what that costs. So I called him up, and I was just like, oh, this is a no-brainer.
Yeah.
So I've recorded.
Did you return all that stuff?
Well, I got to sell it now. No, because I'm not a procrastinator. I just didn't have time. And so I owned it for like 14, 15 months. Oh, wow. Like right now, I think I've owned it for 2 years.
Oh, you've been planning on doing a podcast for a long time then.
Yeah, big, long time. I really enjoy this. I think it's really fun having people down. My first guest today was actually Blair Buswell. He's a very, very famous sculptor.
Okay.
And I've known him since I was 10, something like that. He's a family friend, and he does like all the Hall of Fame busts for the
NFL
Pro Hall of Fame. Oh yeah. Dude.
Oh, nice.
Oh yeah. Yeah, he's really cool. You'll have to listen to that podcast. We don't have to talk about him on yours, but
yeah.
Yeah. So
well, I'm flattered I'm on this thing. I mean, I don't sculpt busts or anything.
No, dude, you're a freaking financial whiz. That's why you're on this podcast.
Man, one day.
Basketball fan, and so tell me about where'd you grow up?
I grew up in a town called Friendswood, Texas. It's a little 30,000 person town outside of Houston. Kind of, if you know the geography of Houston at all, it's between Houston and Galveston.
I do.
So we're about 40 minutes from the beach, the worst beach in the world. But I mean, it is like the brownest water you'll ever swim in, but we loved it. It was our beach,
Yeah.
Yeah.
So what's do you know who the Houston Rockets owner is?
Yeah, Tillman Fertitta or whatever his name is.
Yeah, so he has like a resort on the beach close to Galveston.
Mm-hmm.
And so we put 2 of our courts down there last year for them to do their summer league or their off-season practice, I guess you'd call it.
What resort is it?
I couldn't tell you. Yeah. It's one of those things where I drive up, I drive in the back, they let me in, set it up for like 4 or 5 hours. But it's like right on the water. Like there's the resort, the road, water. Mm-hmm. And it's like, it's not the beaches you would expect.
No, it's not great. There's seaweed everywhere. I think all of the bad water swirls in the Gulf of Mexico and like ends up in Galveston. Yeah. It's pretty bad.
You're probably right, actually.
And the waves are like 6 inches high.
Yeah. It's really rolling. There's really.
I hope the Tour Galveston people are not listening to this podcast. They will not be happy.
I think currently I have no fans in Galveston. So
okay.
If you have a fan though, get on my thing and give me a 5-star review and let me know you're from Galveston. No, I have no idea. I have no idea the reach.
No, I love it down there though. It's a great place to grow up.
It's humid, right?
Super humid.
Yeah.
Oh yeah, it'd be 100% humidity, 100 degrees. In the summertime, it'd be so hot in the shade. You're sweating in the shade. Yeah. It was miserable. Yeah. One summer, I worked at a tire company called NTB, National Tire and Battery, and I worked there for just the summer in between high school and college. And I sweat. I mean, I would come out of that place just soaking wet, like from my ankles to my arms, just soaking wet. And I was in the shade all day. It was crazy.
Yeah. No, if people don't know what the South is like when it's humid and hot, it's just different.
Yeah.
It's like
I can't believe people move there before air conditioning.
Right.
Seriously.
So are your parents Texans?
Yeah. Well, my mom was born and raised in Houston, and my dad, he was he was born in San Antonio, Texas, at a military base. My grandpa was in the Pacific, World War II, and so he's the oldest of 6 boys, and born at I think not Hill. I can't remember the name of it. Air Force Base in San Antonio. I should really know this. That's my bad, Dad. Sorry. And then he grew up mostly in Houston, in Utah and Idaho. He graduated from University of Utah. My mom graduated from BYU, and they met in Houston when my dad was working at NASA. So he graduated with a physics degree and wanted to be he didn't want to be an astronaut. He was just a aeronautical engineer, and so he got a job at NASA out of undergrad and met my mom out there. Nice. Yeah, it's a risky proposition for him moving down to Houston unmarried after coming out of Utah.
Yeah. So are they still live down there?
Yeah, and I'm the 8th of 11 kids and big Mormon family. We and 8 of my siblings live in the Houston area right now. Right. And I got a brother here in Utah with me, and then I have another brother. He's doing a medical residency in Pittsburgh.
Oh wow.
Yeah.
Wow. So you're kind of the black sheep moving up to Utah?
Yeah, kind of. Yeah. But it's good. I went to BYU for a year after graduating high school, and then went on a mission to Korea, church mission, and then came back to BYU for a year, then transferred to a school called Southern Virginia University, SVU, and really it was just honestly to play football. My little brother got a scholarship out there, and I got the itch to play again because I was a decent high school football player, and I tried to walk onto the BYU team, and I'm 5'10" and not super fast, I did the spring workouts with the team and all that, but I wasn't good enough, and so my brother was like, "Hey, screw BYU, come play at SVU with me," and so we both went out there and had a great time, and I was planning on coming back to Utah after that, or to BYU and coming back to the team, but I had a really good time, and it's a small school, so you get to know everybody, and I was a team captain out there, so it was really hard to leave SVU after you're ingrained into it. And so I ended up playing 4 seasons. So I did the Matt Leinart thing where you play 6 years, go to school for 6 years to play 4 seasons. Kind of I took 1 credit my senior year just so I could play.
Oh, did you?
Yeah.
And you graduated from there?
Yeah, I graduated from there, and then moved up to Connecticut. I took a job at a company called Portfolio Advisors, which was still is a huge asset management firm. Investing in private assets across private equity, venture capital, real estate. I think they manage like $30 billion or something like that right now. Yeah, it's really big.
What was your degree in?
It's kind of a generic business degree. SVU is not big, and so it's like a business management and leadership degree with an emphasis in finance. I was doing finance at BYU, but they are accounting and finance, but they didn't have any accounting specific degree at SVU, so I went the next best thing in finance, and I had an internship at an accounting firm between my sophomore and junior year, and I hated it so much that I swore off accounting, and I was never going to do it. And I'm really glad I did that. I mean, no offense to all the accountants out there, but it just wasn't for me. Yeah.
It's not. You don't like being bored.
Well, it's a great background. I mean, if you can understand a financial statement and know the inner workings of a business, that's super valuable. I couldn't do it. It was too boring for me. I want to be more involved.
Yeah, I know I've got a couple really good accountants that work for me, and they love it though, but they love the boringness of it. They love
some people love it.
The organization side of it, everything's in its place, everything's right, they love it.
Yeah.
Good for them.
Good for them. I'm glad there are people out there who do it like that. I'm glad there's lawyers. Yeah. Maybe, kind of. Yeah. Yeah. We can do without most of them, but some people really enjoy that, so good for them.
So it was Portfolio Advisors?
Yeah, that's right.
So how'd you like that?
It was good. A really, really good experience. I got to work with some really bright people that understood finance and investing a lot better than I did. I tried to work my way up there. I was there for 8.5 years. Got an MBA. I did an MBA at NYU part-time, and it was nights and weekends. It was rough. I did this other thing called the CFA. It's a Chartered Financial Analyst. That was rough. That was harder than the MBA, honestly. It's 3 tests. Have you heard of this?
No.
So you take 3 tests, and you can only take them once a year. And if you fail, you have to study again and take it the next year. And they only hand out like so many a year. I think the failure rate for each test is right around 50% for each test. And so it was brutal. I failed the second level once.
Yeah.
And I calculated my hours. I put in like 400 hours each time I studied for one of these things.
Jeez.
It's brutal. And if you fail, it's devastating when you fail.
Yeah.
And it's like the best feeling in the world when you pass.
Dude, also, failing the second one would suck the most.
Yeah.
Right? Because the first one, you're like, this isn't for me, right? But the first
Right.
one, you're good. Second one, you're like,
you're in
freak.
it.
Yeah.
It's like, I got to finish now.
Yeah.
Yeah, that was hard. But
So how'd you like your MBA program?
honestly, I kind of did it as a check the box kind of thing. I wanted to move up within portfolio advisors, and I thought that would help me. I probably should have gone to a full-time program. I think the networking is a lot better full-time. I don't necessarily think that an MBA matters that much. Most of my advice to young people that are looking to get an advanced degree is, I don't think you really need it anymore. I mean, if you want to go work at a big corporation, it probably helps you. Like your resume ends up on top if you have an advanced degree, but really it doesn't make you any smarter. I mean, it's a proof point that, hey, you could study for a test and do a good job on a test.
Yeah.
But I don't feel like I learned that much, honestly. I learned more doing the CFA, studying by myself and really grinding, than I did at the MBA. Because part-time, you can coast and just graduate. Right?
C's get degrees, right?
Yeah, exactly.
Yeah.
I'm not saying that I did that, but I was also working full-time. I had a kid at the time and studying for the CFA. So there's a little bit of coasting that happened.
Yeah.
Unfortunately. I mean, I probably could have gotten more out of it if I'd have put more into it. It's just really difficult to do that if you're doing it part-time.
Yeah.
Yeah. Go all in or don't go.
No, when when my dad, my story, I think I told you this, I was going to go to law school, right?
Yeah.
And my dad came to me and said, hey, I want you to help me run the family business for a couple of years or whatever, right? And I agreed to that. And one of the things that he had to agree to was that he would fund my MBA, right? And so when I first started working, I was like, oh, okay, cool. We'll just grind in this, and just go hard, and we'll kind of keep growing this business and see what I can do. And I always thought, okay, after 2 years, I'll go back and get my MBA, and then we'll figure out what's going on. I was actually going to do a joint JD MBA program was my plan.
Man,
You're
smarter
school,
than I thought.
Yeah. Don't let me fool you. Check out the clothes I wear. But the more I got into business and the more people I interviewed that had MBAs, I was just like, what? Like, you guys don't learn anything.
Yeah. It's not super practical. It's all theoretical.
Yeah.
You probably learned more in your 2 or 3 years working than you did at a 2-year MBA.
Oh, absolutely.
I mean, really setting your feet to the fire and grinding.
Well, I had to learn. I took some accounting in my undergraduate. My undergraduate was pre-law.
Yeah.
Kind of wanted to commit myself to go to law school, kind of thing. But we hired a consultant at some point that came in and helped us with the business, and I learned a ton from him. And then about 4 years into my career, I started doing hard money brokering with Doug.
Nice.
Right.
Yeah.
And so I learned how to value a business then. And really, I always tell people that's kind of where I learned it. I got my MBA, on the street.
Shout out to Doug Shumway.
Yeah, shout out to Doug Shumway.
Who introduced us.
Yeah, that's how we know each other.
Uh-huh.
Yeah. This will be a good test to see if he listens to these podcasts.
Let's not say anything. See if we get a text.
Oh, absolutely. I actually drop little nuggets in these things all the time just to see if people ever text me. And then they do sometimes, but sometimes they don't.
Funny.
Yeah. But yeah, so it was fun too because it was live, right? So people would call in, they'd be like, "Oh, I've got this amazing business idea," and they'd pitch you so freaking hard, right? Now, most of the time, I thought I was the decision maker, right? Which is, as your broker, right? You kind of got to play that line. And so you start talking to them, you start talking about their business. And at first, right, you believe everything, right? Oh, this is amazing. You're right.
Totally.
Of course, chicken coop.
You're going to crush it.
Yeah. Yeah. Well, how could you not put a gas station there? You know what I mean? Just like all this kind of stuff. And then I would underwrite these deals a little bit, you know, and then I'd take him into Doug and he'd be like, this is bullshit, you know?
Yeah, Doug
this will never work, blah, 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 blah.
Doug is scrutinous, if that's a word.
Oh, yeah. Yeah.
Wow.
Him and I are actually a really good team because he'll tell me all the reasons not to do something, but we have enough respect between each other that when I go, yeah, I know that, but I'm going to do it anyways, he goes, okay, great. I'll make sure you're protected, you know?
Yeah.
And so...
You got to have that balance. Somebody who's the gas, somebody who's the brakes.
Yeah.
Otherwise, you're just doing everything, you're doing nothing.
Right. Yeah. Which is, both of those are worse.
Mm-hmm.
Both of them are absolutely worse. So, and he has told me a few times, like, do not do this. And I'm just like, okay, cool. You know, like if I get a full on, like, absolutely not, like, it's done. I don't do it.
Yeah.
So.
No, he's a good dude.
Yeah. But yeah, I mean, going back to the NBA, I just feel like, gosh, man, I don't know anyone. I've never met a person. That's why I was really interested to hear what you'd say. That was just like, oh yeah, the stuff I learned in NBA, priceless.
Yeah.
Never heard that in my life.
I think most of the time it's the network you get from the NBA. Mm-hmm. I mean, if you can get into a top 10 school and go for the network, I mean, even like locally, BYU's got a pretty good NBA program. It's always kind of like top 20, top 25. But the network that comes out of there, that's really strong. And going part-time, you just don't get that.
Yeah.
So, you know, I got a bunch of buddies who went to Harvard or Stanford, and they keep in close contact with their buddies from their MBA program, and that's been a really valuable network along the way. I mean, we all have our networks, right? You've got your We Are the They movement network, which is really strong, and that binds people together, and you can help each other out along the way. And I think that I keep in touch with a couple people from my MBA, and they're good. They're good dudes, and not for like any kind of professional advantage or anything. It's just I like the guys.
Yeah, they're good guys.
Yeah.
Now you did so NYU. That's a good program, isn't it?
Yeah, it's very expensive.
Is it?
Yeah, it's a money maker for NYU. Again, NYU, if you're listening, don't hate me. It's
how much was it?
I think it was $120,000
for 2 years.
For 2 years.
2 years, yeah.
Yeah, which still paying that off.
Yeah.
Yeah, but interest rates are low, so it's
ain't bad.
Yeah, I'd rather use my money for something else.
Yeah. Invest in it.
Like investing, exactly. In fact, here's a funny story. I actually, maybe I wouldn't recommend this to everybody listening, but when I took out loans to do my MBA, I maxed out how much they would lend to me, and I took the excess and I bought rental properties with them.
Oh, did you?
Yeah. So I actually took out $190,000 of student loans, and my company that I was portfolio advisors paid for like $20,000 of my MBA. So really that difference of $90,000, I used all of that to invest in real estate.
Oh, nice.
And so I bought 5 rental properties in Houston back in 2012 and 2013, and I held on to them for about 5 years, and then finally sold them. I wish I'd still have them.
Yeah.
They'd be doing great right now.
That's what everyone says, right? Every time they sell real estate, they're like, I wish I never would have sold that.
Yeah, but I made good money, so it was well worth it. I think I probably doubled my money in that 5 years, and I got some nice tax write-offs.
Yeah.
All the advantages of real estate that I'm sure you know.
Yeah. Yeah, absolutely. So after you left Portfolio Advisors, where'd you go?
Yeah, so I joined a group locally in Utah called Signal Peak Ventures. I got to know those guys at Portfolio Advisors. We invested in their fund. I got to know them really well through that process. I knew there was a job opening happening, and basically I worked my inside angles to get the job, and it worked. I started off there in 2016 as a vice president. I joined as a vice president. I worked my way up a little bit, and I was there for about 6 years before I left in April of this year to form my own thing.
Right.
Yeah, but Signal Peak was great. Had a really good experience. Learned a lot.
Why did you want to leave Portfolio Advisors and come out here?
Hate to admit it, but we did not really want to go to Utah. we're LDS, and there's so many Mormons here in Utah, right?
I've heard.
Yeah, you've heard. There's probably less than you actually think. You think, oh man, everybody in Utah is Mormon, especially in Provo. There's a lot more than in Salt Lake County, where I live. And so my wife and I was like, we don't really want to live in Utah. We want to have our kids grow up outside of Utah, because we both I grew up in Houston. She grew up in California. So Utah was last on our list, but the job was just too good to turn down. Honestly, it was such a great opportunity to get into the VC world that I couldn't turn it down. But why did I leave Portfolio Advisors? I think my time there was, I just really learned a lot and have a lot of great relationships still from those days, and some mentors that I keep up with on a regular basis now, and that invest with me now. It was just time. It was time to go. Your first job out of undergrad, it's hard to be there for 9 years, and I probably should have left 3 or 4 years in, but I got the MBA and the CFA, and I learned a lot. So we had a great time.
Yeah, you're kind of cutting your teeth there.
Yeah.
What's the most valuable thing you learned while you were working there?
At Portfolio Advisors?
Yeah.
I learned a lot there. I started off as a snot-nosed recent graduate. Probably should have gotten fired a couple times for doing stupid stuff. I got bailed out by some guys, so hopefully they're listening. Thank you. But really had to act like an adult. When I first joined, man, it was so hard to work 40 plus hours a week. I'd be sitting at my desk counting the hours until I left. It's this is not for me. I need to go do something more entrepreneurial. I've always had this entrepreneurial itch, but I just kind of sucked it up, and everybody does it kind of thing. So I kind of learned how to be an adult, be more professional, how to interact with people, write emails that sound professional, not like a little kid anymore. Yeah. I just grew up there.
Oh, that's cool.
Yeah.
So you go home and tell the wife, are you moving to Utah?
Yeah, well, she knew the opportunity was brewing. I was looking around at a lot of different places doing some similar things to what I was doing at Portfolio Advisors, and it just wasn't super attractive to me. I had a job offer in New York City that paid pretty well, that I turned down because I just didn't want to do that anymore. It was basically the same job I had at Portfolio Advisors, which is great. Again, people love it, and I had a great learning experience. It just wasn't for me. And so then I wanted to get into being closer to the company. So what a fund of funds is, right? So we invested into venture capital funds and into private equity funds. So if you think about it, the analogy I like to do, like a baseball game, the entrepreneurs are on the field, they're playing. The VCs or the private equity funds who own the companies, they're the managers, kind of saying who's playing what position. And the fund of funds, still a great job, is again the owner's box. Right? They're not the normal fans. They're in the owner's box, so they can kind of dictate some things to what the manager does, but you're really just viewing. And I just wanted to get closer to the field. And so I got closer to the field with a move to Signal Peak, where I became a VC and started really helping companies and entrepreneurs directly, and that was really invigorating for me. And I there's always this thought oh, can I do it? Can I be successful? And you doubt yourself, but really it didn't take too much more than I could already knew to be able to do it, and I learned a lot, but it's not rocket science, right? It's mostly hustle, in my opinion. But other people will say otherwise. But
so, what was Signal Peak's investment strategy?
Yeah, we invested in early stage tech across the country. That was mostly non-coastal tech. So we wouldn't compete against the New York and San Francisco VCs. Probably half of our portfolio was in Utah, but the other half was in a little bit off the radar places like the Midwest. I had a couple companies I was involved with in Indianapolis, of all places, a couple in Austin, a couple in Denver, and in Utah. So kind of these up and coming tech hubs that were off the coasts. I mean, if you look at the fastest growing, not to give their pitch for them, but the fastest growing tech hubs in the U.S., certainly Salt Lake Provo area is one. The Denver Boulder area is another one. Austin, Texas is growing really fast. The Midwest tech scene is really exploding right now. So we tried to play in those areas where there's less competition for funding, and yeah, I mean there's good ecosystems there. There's a lot of seed capital that we had the advantage of watching seed companies get started, and then we come in at the Series A. We were mostly a Series A kind of fund. For those of you that don't know, I mean, when you start, you typically do a tech startup. You typically take angel money, and then you follow that with a seed round, and then the Series A, B, C, and it goes on alphabetically like that. And we played in the Series A place after product market fit is mostly found. They're doing about $1 million of recurring revenue. That's where we played.
So how long were you there?
There for 6 years.
6 years?
Uh-huh.
What were some of the projects you really liked working on there?
Are
you allowed to say?
Yeah, I'm allowed to say. I just don't want to pick favorites, They were.
Gotcha.
I had a lot of fun. VC is hard because you have to raise money to make the investments. And so spent a lot of the first couple of years there helping raise a fund that we could invest. The things that I liked the most were finding companies that I loved and rallying the troops internally to get on the same page as me, and we had invested. So I loved finding great companies and great entrepreneurs. There's a few in Utah that I loved. Like I said, Indianapolis. There's a company that I found. It's a company called PackSafe that we invested. You're familiar with all the pre-money, post-money, all that kind of stuff.
Yeah.
So we found a company that was doing about $1 million of revenue, and this was back in 2018, and we invested at an $8.5 million pre-money valuation. And 3 years later, they sold to a company called Ironclad. It's a Bay Area-based tech company. Again, I'm not supposed to say the price, but we made some good money on it. And then Ironclad continues to be successful, so we own a bunch of stock in Ironclad.
Oh, nice.
That was really fun. Honestly, the best times as a VC is when you get to work with the entrepreneurs. I would typically have bi-weekly or every 3 or 4 weeks, have a call with the CEO, see how I can help them. And then we'd meet once a quarter for board meetings. And that was just always great getting together with the teams. It's not just the CEOs. The CEO would bring in their chief marketing officer, chief revenue officer, product people, tech people, and have a board meeting. And just the experiences of, having the board meeting, and then afterwards going out to dinner with everybody, just getting to know all these different people from across the country is super fun.
Yeah.
Yeah, I loved it, and I still love it. I mean, that's what I do now too.
Right.
It's a lot of fun.
So you decided to leave and start on your own firm. Right?
That's right.
So tell us about that. How'd that all go down?
Yeah. There's a lot of reasons that I left, but mostly I wanted to leave because I wanted to do my own thing. I'm very entrepreneurial, and I've never really operated a business. And as a VC that hasn't operated a business, it's like, hey, how can you help me if you've never done this? Yeah. And look, I'm not operating a tech company by any means, but I started something, and it feels cool to I'm kind of an entrepreneur now. I saw the opportunity to partner with somebody that's world-class operator, and he provides more of the operational expertise that I don't provide, and I provide the VC know-how that he doesn't know, and it's a really good really good partnership. So at the beginning of this year, I made a list of all the people that I would want to partner with. And I didn't know you at the time, so sorry you weren't on it. You would have been number one on the list. No doubt. And I made a list of 20 people, and I started having lunches and, you know, conversations with each of them saying, hey, this is what I'm thinking about doing.
Yeah.
I saw a friend of mine do something similar last year. Do you know Dave Jensen or Sandlot Partners?
Oh, for the Sandlot Partners.
Shout out to Sandlot, my inspiration. And he did it last year, and he started his own private equity firm, and it was inspiring to me. I saw how successful he was, and I thought, hey, look, if he could do it, I could do 10% of what he does and still be okay. Yeah. And so I made that list, and I talked to some of my mentors. The partner at Signal Peak, at Portfolio Advisors that I was closest with is the guy who runs the firm, is a guy named Brian Murphy, who's absolute man. And I talked with him, and he's like, look, if you can get this guy, is Alex Bean is my current partner. I told him who my top 3 were, and he said, you should leave in a heartbeat if you can get him as your partner. And so I did, and I talked to Alex, and Alex and I knew each other. A little background on him: he's one of the co-founders of Divvy, the local Utah success story. Yeah, they started the business in 2017 and sold it in 2021. Maybe it started in 16, but started in 16, sold in 21. It's 5 years. Sold it for $2.6 billion to Bill.com. Yeah. So really incredible success story. Alex and I got to know each other through that process when he was raising money for Divvy back in 2017. We actually, unfortunately, did not invest in Divvy, too much to my dismay. But you know, we built a relationship then. We went to a jazz game together. I was trying to woo him. You know, those are the kind of things you do as a VC. Yeah. It's not a people don't pick you as much as, well, people do pick you. You need them to pick you. And so I tried to woo him to let us in his company. Anyway, we got to know each other pretty well through that. We reconnected back in January of this year. I said, hey, I'm thinking about doing this. What's your appetite for doing it? And he was pumped, and he had been wanting to do something. He had left Divvy when they got acquired back in, I think, June of 21. And he's been building this platform for, it's called, the announcement isn't out yet, but it will be out by the time this is published, called Cathartic. Cool. And it's not just an investment platform, it's a navigation of wealth platform, to where money can either ruin people or make people immensely happy. And it's about helping people navigate those decisions and how to raise your kids through wealth, and not just how to make good investments, but like how to handle it and really be happy. And so he's been building that. And as part of that, we're doing a venture capital platform. So that's, what we reconnected on in April of 22 this year. We decided to do it, and I pulled trigger, and we had our first deal done in May. And what we're doing is we're doing a fundless sponsor model right now, where we will invest in tech companies, mostly at the growth stages, and we'll go out and raise money from our network, friends or family offices that we know that are interested in this asset class. We will go out to them, say, hey, we won this deal. We're going to invest $3 or $4 million into a company. Would you like to invest alongside us? And that's what we're doing.
Nice. Why'd you pick that model?
Well, I think full transparency, we are going to raise a fund, but there's a couple things I really like about that model. One is quicker liquidity. Most of the time when people invest in funds, it gets locked up for 10, 12 plus years, and not everybody can afford to be illiquid for that long. Mm-hmm. And so we want to speed up the liquidity for our investors. I think the growth stage is really attractive for that. we target a 3 to 5 year hold on all of our investments and a 3 to 5x return. And if we can, I mean, obviously that's, lofty goals, but through an SPV, these are single asset entities, we don't want to have any losses. And so we optimize around, first, don't lose anybody's money. So we think we can get our money back on all of our deals, either through an exit or somehow getting our money back. We're most of the time top of the investment stack, so we feel pretty good about the outlook of the company and at least getting our money back. And second, we want to figure out a way we can get to 3 to 5x returns for our investors. It's not liquid, so you can't just buy and sell every month or every day that you want to. It's only liquid upon a liquidity event or an exit, or if we can sell shares on the secondary market.
Yeah.
So we want that. That's why we chose the model. Earlier liquidity. We think there's a need in the market, at least maybe not a need, but demand in the market for high net worth individuals and for family offices to get into the asset class on a deal by deal basis.
Yeah.
And we have a great network in the space, so that's kind of our initial foray into growth investing.
So talking about liquidity, I mean, I understand that. But why would an investor want to be liquid?
Yeah, so they can use it for other things. I mean, things pop up, expenses pop up. If you feel like you're never going to get your money back, it's obviously a bad feeling. And so in finance, there's this thing called an illiquidity premium. So you expect a higher return if your money is locked up for longer. Mm-hmm. And so in venture capital, if your money is locked up for many years, you expect to return in excess of the public markets, because public markets you can buy and sell every day.
Yeah.
And so we think there's a liquidity premium that we can get by investing into companies that we can actually help. So that's another part of our strategy, is we invest in companies that we think that we can help. And the beauty of it is our first 3 deals, we've had 50 investors in each deal, roughly 50. And it's not just our networks that can help the company grow, it's the networks of our investors as well. And so it just multiplies our connection points, how we can help a company. I like that aspect of it a lot, actually.
Yeah. So is NERSA the third company you guys did?
That was our second deal.
Oh, it was the second deal.
Mm-hmm.
Okay. So NERSA is one that I invested in.
That's right.
Which I'm super excited about.
Yeah, it's a great one.
Tell us about NERSA.
Yeah, so NERSA is a Utah company where it's like an Uber-like experience for nurses, where you can pick shifts based on your availability. It's you're a 1099 worker. You fill hospital shifts or long-term care facility shifts as a nurse. What that does is it gives a lot more flexibility to the nurses, and it fills a need for the hospitals or the long-term care facilities. I mean, for the hospitals, it is a little bit more expensive. I think that's a little bit of the downside, but it fills a need, and it does it quickly. I mean, there are nurse staffing businesses across the country that are not tech enabled, and this is competing with them more so than with hospitals. Yeah. And so the company has been growing tremendously. And we had access to a financing round. They're not publicizing it, so probably shouldn't talk about any specifics. But they had we had the chance to invest some money into the company, and we jumped at it. In fact, when I left Signal Peak, I had a list of a handful of companies that I really wanted to get into. And NERSA was one of them. And so we found our way in, and we got in, and now we're trying to help the company as much as possible. So if you or anybody listening that knows any nurses to get on the platform, go for it. And if you are a hospital administrator, then you need NERSA.
Yeah, give NERSA a call.
Yeah.
So tell us, on the investment side of it, why is it an investment? Why is it an attractive investment? Like, how'd you talk me into putting money into it?
Well, it was the highest degree of scrutiny, obviously, from from President McCormack. Look, the company's been growing really fast. The things that we look for is a growth rate and total addressable market. They call it TAM for short. But really it's how big is the market that they can go into, and how fast are they growing, and how good is the team. And so you check those boxes, and I thought it was a really attractive investment.
Yeah.
I mean, you have a world-class team operating in a big market, and it's growing really fast. These are like all buy signals.
Yeah.
So when you see those things, kind of perfect storm, and you had all the insider investors that are doubling down, who are on the board and know what they're doing. They're really smart people that are on the board. These are all buy signals for us, and so we jumped on as quickly as we could.
Yeah. Yeah. No, they're wanting to go public in the next 2 years, right?
Probably shouldn't talk about that. I don't know. I don't think they're going to go public in a couple of years, but I do think there's great path forward for the company.
Gotcha.
Yeah.
Makes sense.
There's whether through IPO. I mean, the public markets suck right now. Nobody wants to IPO anytime soon. Through M&A or raising a big round and buying some other companies in the space. I think there's a lot of avenues to make money with this business. Yeah. Yeah,
absolutely.
Yeah, no offense. I can't talk too much about it. I don't want to tick anybody off at the company.
Yeah, I got you. No, it's kind of fun though. I mean, I guess we're more in a public forum, but when you and I are talking about these businesses, when we talk about the opportunities and all that kind of stuff, kind of trying to give a little bit of insider information. But it's interesting to talk, like when you really start looking at businesses, like the team matters a ton.
So much.
Probably, I don't know, it might be the most important. I mean, product obviously most important, right? But
it really depends on what stage too. Yeah, like so this is a growth investment. They're already pretty established company, but in the very early stages, if you're doing a seed or a Series A investment when they're less than $1 million of revenue, it's all about the team. Yeah. And I think that's it's not a science, right? It's more of an art and judgment of character, judgment of integrity. I mean, you got to trust the people you're backing, but two, like, are these people are going to work hard to make money? And are they going to, in hard times, are they going to give up, or are they going to pivot and adjust the company roadmap a little bit? That's really what we're judging at the early stages. And can you recruit? Can you recruit and can you raise money? The CEO's number 1 and 2 jobs are recruiting good people to replace all the things that they've been doing for the past couple of years. Yeah. And can they raise money? Can they sell the story? Because if you can do that, you'll keep raising money and you'll keep attracting good talent, and that's the perfect storm for a really successful outcome.
Yeah, absolutely. How many deals are you seeing a month?
So right now, man, I get a couple a day probably, mostly at the very early stages. So we just there's this thing called the Silicon Slopes Tech Summit. It's a big event. It was at Vivint. We announced that Jimmer Fredette was joining us as a partner, and that we were going to raise an early stage fund. And since then, we've gotten a lot of inbound interest from that. I mean, people hit our website, people hit our, it's tandemvp.com, tandemventurepartners.com. And, we get a lot of cold emails, honestly, but really all of our networks, me, Alex, and Jimmer, get deal flow sent to us a lot. It's not all great, but that's our job, is to look through all the deals and decide which ones we think are great. And look, people, I've passed on people who have done super well, and vice versa, where people passed on us and they've gone on to do super well. So it's you try to eliminate all the noise, but if you see a couple a day, and that's not even really trying, that's 200 working days a year. That's 400 deals a year you're seeing. That's a lot of deals to go through. Yeah. The goal is to build a team that helps us sift through it and choose the best ones. I mean, the SPVs are doing, the growth stage stuff is great through these single asset entities, but when we do raise a fund, we haven't launched the fund yet, but we're going to. The reason we're doing that is because we see so many great early stage companies and entrepreneurs that we really want to back, but we don't want to have a ton of risk in what we're doing for our investors.
Yeah.
So if we can aggregate the risk through a fund, then you don't care if you have a loss or two, as long as you have some big winners.
Yeah, so you're gonna do a big pot then.
That's right. My goal is to invest in 80 to 100 companies in each fund.
Right.
And really, there's a book called Power Laws. It's in venture capital, you don't make money on the ones that do okay. You make the money on the divvies of the world that go to $2.5 billion. That's how you really make money. And the goal is to sift through the noise, invest in ones we think we can hit that potential, and then hopefully in each fund we can get two or three of those really big wins.
Yeah. Do you have any AI stuff you're looking at?
I get sent AI stuff a lot. We're not I'm not gonna say I'm the smartest guy out there. I'm not gonna try to claim that. I don't really know how to underwrite AI, but most of the companies now have some component of AI or machine learning.
Yeah.
But no, it's not it's not an investment thesis that we're going after. We're really generalists, and we want to invest in great people. Whether that's I'm not a biotech investor, but if there was an amazing entrepreneur doing something in biotech, we'd probably back them. Even though we don't understand the space. So we're really generalists. We just rely on our network of really smart people around us who can underwrite those things.
Yeah.
Yeah.
So with your guys' strategy, what's the best way to bring value to your investor?
Make them a lot of money.
Yeah.
To our investors in our...
Yeah, so the guys are going to join your fund like me.
Yeah.
How many, when you guys put your objectives together, what's the best way to bring value?
So, look, we want to be very transparent with our investors. We want to be investor friendly. So that means lower fees than you'd typically see from a venture capital firm. But really, we want to be transparent. We provide quarterly updates to our investors, and we say, hey, this is how the company's doing, good or bad. We all invested. We put our personal money in. Our goal is this is not totally typical, but our goal is between our partners to do at least 10% of every deal we do. So our money's tied up with you. And whether it's going well or going poorly, we want to let everybody know. And then we say, hey, how can you help your investment grow? Well, Mark, if you've got a friend who's a nurse, have him or her sign up on the platform. We give ways for our investors to help the companies. I think, we're not looking for massive things from our investors. It's just, hey, you want to help your investment? Great. It helps all of us. And what we can do for our investors is we just want to make people money. Mm-hmm. We're not trying to provide a networking group of our investors. It really is, they call it limited partners. You're a limited partner. We want to make people money and be able to do that in a repeated fashion. Yeah. And look, we do some fun things along the way, and we invite our friends and investors to go do those things. So yeah, that's what we're all about.
So if someone wants to start a fund, I get asked this all the freaking time.
Yeah. How many people want to start a fund that you've talked to?
It's mostly when people start, when they ask me what I do, right? And I tell them I'm complicated, right? So normally if you come and talk to me, I don't really want to talk to you about it. Not that I don't want to talk to people. I'll just say, I work in a manufacturing plant, right?
Super boring.
Yeah. And the people are like, oh, okay, cool. They don't really care.
You're the most interesting, boring guy I know.
Yeah. But then people will, if they really ask, or I'm at a function. Actually, here's a funny thing, right? So I went to a drag queen show like a week or two ago. You probably
You
saw
started in it, or you were in it? You went to it.
Well, I ended up being in the thing for like 5 minutes, but I just my friend bought a table to support one of his friends who was in it, right?
Cool.
And he was like, "You guys want to come to this? They're wild and fun and extra. It's like the perfect version of being extra. you know." And I'm like, "Sure, bro. You know, bring the wife, go to this friggin' show." So, anyways, he sits me front row, right in the corner, right? I'm just like, bam, right there. And so they start teasing me. The main drag queen was teasing me. I look like a blend of Simon Cowell and Mr. Clean. So I'm just taking my roasting from him, right? And just getting kind of lit up, it was really funny, actually. It was really funny. But then, so a couple acts go by. So they kind of come out and they would interact with the crowd. Then they do like a song and dance. It's like a Halloween themed thing, right? It was like Hocus Pocus to start off with, and then cats and just all this like really, it was a lot. It was fun.
It was extra.
It was extra. It was a lot. And so then he comes back out and he says, "Mark, come over here." You know, so I come over and I stand next to the stage and he's like asking me questions, you know, "Is that your wife?" You know, and then teasing me. My wife has braces, so he was joking that I was married to a 16-year-old or something in Utah. You know what I mean? Just roasting me, right?
Yeah.
And it was fun. And but then he goes, "You know, what do you do?" And I was just like, "Let's make this simple." You know, I go, I'm in private equity. And you know, then they just go like, and then she kind of says something like, "Oh, this, blah, 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 that," you know, and just kind of starts teasing me, right? And so, but I think back at that, and it's like when people like ask me what I do, really what I do all day is try and raise money and invest in things. You know, I mean, I have my own businesses, you know, I have different little things that go around, but really at the end of the day, the fund is the thing I'm trying to grow.
Yeah.
And that's why, you know, we interact, or we started interacting.
Right.
We interact more now that we're friends, but you know, it's such a fun industry to be in, but it's like, it's very broad.
Yeah.
You know, each fund has very specific industries that they want to go into and very specific, you know, objectives. And so.
Yeah. I typically, when people ask me what I do, I'm always like, I work in finance. I just.
Yeah. Yeah.
I just sit at a desk all day.
That's exactly what I do all day.
There's a lot of sitting at a desk.
Take a lot of phone calls, go to dinner every now and again. A lot of lunches. Yeah.
Honestly, lunch is the best networking I do.
Absolutely.
I go to lunch. I try to go to a lunch every day.
Yeah. Oh, do you?
Yeah.
Oh, good.
I'm not always successful at it, but I'm probably four out of the 5 work days a week. I'm at a lunch.
I'll tell you the thing that I found the best way to do it is to do a small networking event. It's the best way to fly for that. Part of my problem is I have too much on my plate. So if I was doing lunches every day, it just burns like 3 hours, right? Driving there, hour and a half, driving back, like it's just too much. But if you do like poker nights, are amazing, you know?
Yeah, because you can really bond with a small group of people.
Yeah, and you get 7, 8 guys.
I don't like going to these big events where there's 1,000 people. I get nothing out of those things.
Never.
I'd much rather have an hour or two with 5 to 10 people and just real quality time.
Yeah, and like non-objective, right? It's just like, hey, what do you guys do? I've actually been to a couple of groups where it is to network, right?
Yeah.
Which normally those ones suck. That's like the worst, right? Everyone's walking around with a beer and it's like, what do you do? You know, it's like,
cool.
You know, it's like no one that brings value, right?
Yeah.
So I'm going to do a couple. It's like, hey, all you guys, y'all do great business. You're all successful. If you want to do something great, anyways, you know, $500 buy-in, and then bam, we're into playing poker, right? And then you just kind of like laugh and joke and tease, and that's where I really thrive. I thrive in
that's really cool.
Having a good time model.
Hey,
you know,
invite me to your next one. Let's play.
Oh, absolutely.
Take all my money.
Yeah, I've been to a couple of those. I need to start winning more.
I got the worst poker face. I have a really hard time lying, and so if I got a good hand, you know it. It's really unfortunate.
Oh, really?
Yeah. Maybe it's the baby face in me too.
Dude, absolutely.
Yeah.
I get bored in poker. That's my problem. If the game's not moving quick enough. Have you played in Vegas?
No, not
really
like
fast. It's really fast. So it's a lot more of an intellectual game. Like you're just constantly like, you know, wondering what the hand is and what other people's strategies are, and you're like paying attention to what they're doing. You know what I mean? But then you play like with your buddies, right? Especially if you know you're having some drinks.
You just screwing around.
You know, like everyone's joking around, and then you know 4 hours later, I'm just like all in.
And nobody cares anymore.
Yeah, no one even cares.
Yeah.
So. But you have to watch out for that because guys will stop carrying and then they start going all in, and that's when you want to start banging them, right? Then they're like, oh yeah, I had a 7-3. It's like, what are you doing?
Why are you doing this?
You know, it makes it a lot of fun. But but those are the events that I really thrive in. And then when people kind of, you know, figure out what I do, it's just like, man, if you're really, really interested in what I do, we'll have a phone call later. But like, you know, I basically take your money and I try and quad it or freaking 5X it. That's what I try and do.
Yeah, exactly.
You know, get into good companies, medium risk, you know.
The thing is, like you and I have, not to, I'm not trying to brag here, but like we see companies that most people in America do not have access to investing in.
Oh, absolutely. Like
when they think of investing, they think of stocks and bonds, and they wouldn't know how to get into a private equity deal or a venture capital deal. And I think is a kind of an unfair advantage if you can put a bunch of your money into that and you know what you're doing, your returns can be much higher than just the public markets. I mean, when you get a 3X in the public markets, unless you're doing options or you know,
especially in a time frame.
Yeah, you know, pick the bottom of Apple stock right now.
Yeah.
You know.
So it's funny. I was talking to a buddy last night, right? I'll leave him unnamed. He doesn't listen to my podcast. I asked him, but he
not too good of a buddy then.
Yeah, well, he's just busy. Yeah, his life is busy for him. I've known him for a long time. He's a great dude, but he's basically like, hey, let's get like. He like sat me down. He's like, let's get like 10 guys together. You know, we'll put like 50 grand in, and we'll do these startups. And I'm sitting there just like, I'm so far away from this dude. Like, you have no idea how far away I am from this. So he's going on and on and on. He's kind of a talker, you know, and I'm just
like invest in startups or go start startups.
He wanted to start a startup. Oof. Like, didn't really have one identified either, by the way. This was just like, it was like, hey, we'll raise $500,000. You know,
go figure it out.
And I'm like, dude, $500,000.
like, so like on an
that's
idea.
Like minimum investment. You know what I mean? Like, there's no way we're just gonna, you know. And what a nightmare! 10 guys with $50,000 in there. You know what I mean? Neighbors and all sorts of. You know, it's we can go over that later. Why that's a nightmare. But I started talking to him, right? And what I hate is people always do this thing where they're like, well, you know, we'll buy real estate. We'll put this real estate component in there. And to me, I look at real estate as the biggest freaking anchor. Like, real estate's good over 20 years, right? Real estate sucks in 3 years, kind of sucks in 5 years. But to me, real estate's very easy to understand, right? I mean, people are just like, I get it, real estate. And what they do is in their mind, they do this mental hedge where they go, well, the business might be risky because who the hell knows if we can perform, right? But we'll buy a building. And worst case scenario, the real estate's going to perform, right? Yeah. And so I'm sitting there, and I'm like, bro, with the way interest rates are right now, you'll have a hard time getting a 5 cap, right? So let's take a 5 cap. Let's do that over 10 years, right? You're like a 50% return, okay? So if I give you $10 million, you'll return $5 million to me, right? And we'll take appreciation of the
over how many years?
Over 10, right?
Yeah, that's not great.
And he's like, oh, absolutely, man, 50% return. Blah, blah,
but it'd
blah.
Appreciate.
Right. And I go, let me explain to you private equity. Yeah. I will take $10 million and 10x it in 10 years easily. And that investment that I gave you will have cost me $95 million. Which one would you do? Yeah. And he just kind of sat there stunned, right?
If you can 10x it, yeah, for sure.
Well, you know, you do 3 deals in 3 years, you know, or dude, in 10 years, you can 10x your money easy.
Hey, knock on wood. I hope we do.
We'll make it happen. But because you're rolling your money. That's kind of the point, right? You're getting into this deal, you get the next deal, and the next deal, you know, you got another thing too. It's actually pretty easy too, because once you do the first deal, let's just say you 3x it, you know, then you have, well, I don't want to do quick math here. I'm going to get it all wrong, but you know what I mean? By the time you do your third deal in year 7 to 10, I mean, you're already freaking up.
Yeah, you're up.
6, 7, 8, 9x. So anyways, but I was trying to explain that to him, and it's just kind of funny when it actually sunk into him. He was like, oh. And I'm like, dude, investing is about turning your money. It is not about slamming it into an asset that inflation is going to naturally increase the value of it over 10 years.
Yeah, it's crazy to me how there's just so many ways to make money. Yeah. I mean, that's the thing that growing up, you don't realize. So I grew up in a family that my dad, so he worked at NASA. Great job, right? But you know, it was always kind of ingrained into us to go be a doctor, a lawyer, some kind of professional. So I was always going to be a doctor, and you know, I didn't know what venture capital and private equity was until I graduated college. Right. You know, it's like a whole new world out there, and the more I go, it's like people make money having a flooring business, right? Like there's so many different ways to make money it's just growing up and going to college, you just don't understand. So you'll ask me for advice later. It's like, explore. Yeah,
absolutely. No, and that's another reason why like my flooring business is a good example, right? Like if you look at our market penetration, right, we are probably at 3%. I mean, there's so many wood floors in the world. You know,
a lot of wood out there.
Now, if you take out, I mean, there's certain wood floors. We only want to do portable wood floors, right? We know that's kind of like the upper echelon. You got to be really damn good at what you do, and we have 2 competitors. That's pretty much it. And but then that's like at the NBA level, right? Then you would end the NCAA level, right? So we do the tournament, all that stuff. We basically have the big medallion, parts of the market that are already inside of our world. But, you come into this business, I got into this business for, how much money did I put in there? I'm probably like 400,000. It's, by the time that's the peak of me putting money in, about 400 grand. And to float the business and cash flow and that kind of stuff. Right. But like, over 4 or 5 years, we'll have $10, $20 million in revenue, with probably
it's a pretty good return,
40% margins. But I can control the whole thing, and because that world just exists in a couple other businesses that I'm in, you're taking basically an expert CEO, inserting it with an expert partner that's the operations of the business, getting stuff done. And it's like, if you really understand, this is a very simple business, right? There's not like a tech component. There's a real estate component because I couldn't help myself, I guess. But you know what I'm saying? But it's like the real value of that business is just growing the sales. Just growing that market. How much of that market can you grab, and how fast can you grab it? And I'm looking at it. And I think we can grab 40 to 50% of the market in like the next 2 years.
And how much of that is hustle versus everything else? I mean,
well, the first part
being
of it was
good to
hustle.
people, treating people the right way.
Yeah. Treating people the right way is 100% of it.
Yeah.
But the reason why is because treating people the right way in this industry makes you the expert. And gives you the professionalism, right? Because there's so many little rinky-dink companies out there that will do one floor, or they'll work on one floor and they suck at it, right?
It's not transactional. These are relationship businesses.
Yeah. And so we're actually pushing it more transactional, where people are like, no, these guys are the experts. Let's just get our floor over to them. They'll take care of it and give it back to us. So, and that's where price gets eliminated a little bit. You can't be ridiculous and get out of their budget, right? But if they're like, I can have these guys come to our building, spray their crap everywhere, be messy, do all this junk, or we can just stick it on a truck, send it to these guys for an extra $5,000. They do it all. They send it back to us. Perfect.
Nice.
That's our business model. And it's easy to replicate it once we get there. I always say easy, and I actually mean simple. Our business is simple.
Yeah. It's not rocket science.
Yeah, it's not rocket science. But you can take that same model and really apply it to almost every single business. I think where some businesses go real wrong is when they start really complicating what they do, or they add too many verticals, or they add too many product lines, and then it gets mushed up in there. Like every time I've gone into a business to I wouldn't say fix it, but to rearrange it and stuff like that, it's just eliminating all that crap. It's like, why do you guys do this? This costs you like 20% of your revenue.
Yeah, what are you good at?
2%
Focus
return.
on it.
Yeah, and they're just like, I don't know. We thought that would be a good idea. It's like chop. You know what I mean? Move on to the next thing. And that's that's also why I like private equity. NERSA was different. Obviously, we just invested in that. We weren't going to fix anything or even take a board seat, right?
Yeah.
But a lot of the deals we look at, it's like, we're going to take some board seats. And like I'm talking to a distillery right now. Well, we're done talking. I said no, but they wanted some money, right? And I said, it's not that I don't trust the CEO per se. I mean, there's a little bit I don't trust him. But it's like, I'm like, here's the deal. If I'm going to invest money into this, because I'll be your largest cash investor if I do this deal, we're going to take 3 of the 5 board seats, and the board is going to run this company. So if we want to remove you as CEO, you're gone. But as long as you perform as a great CEO, you'll report to the board, and everything's great, right?
He didn't like that?
Oh, hell no. That's really what killed the deal, I think.
It's hard to give up control. I mean, if you started the thing.
Yeah, but if you want to take it to the next level, though, you know what I mean? And that's what they need. They need a massive cash infusion so they can take it. And here's my thing. We would have 10x that distillery in 2 years. Easily. Absolutely easily. And so, in fact, one of my guys is in there right now, one of my partners, and I think he's already doubled the sales. It took 2 months.
Really?
Yeah, because he's an industry expert, an absolute industry expert. So they're moving so much, pallets. I mean, he's got, they have like 2 open orders right now with the state of Utah. Or no, it's one open order with the state of Utah, and like they got to fulfill it, and they're kind of like fretting about it, and it's like the stuff they don't focus on. Like we really sat down and was like, man, we could really affect this business really, really quickly, but you also have to have control.
He said no.
And they said no. So every deal I've ever gotten into, not every deal, but in the last 10 years, I have complete control.
Yeah.
Just you can pull the lever. But I also feel like that's a fiduciary responsibility for my investors, right? You invest with me, I have control over this investment, or it's very clear that I don't.
Right.
You know what I mean? Like if we go into some of these tech companies, obviously we're not going to take board seats.
Yeah, it's a little different. Venture and private equity are a little different in that regard.
But if I'm jumping into medium-sized businesses, it's like, oh no, we can go in and wreck this business if we need to.
How many of those can you do at one time, though? Is another question.
What's that?
How many of those kind of businesses can you do at one time? I mean,
true.
Controlling and being hands-on with each one takes a lot of time.
Well, I think, to me, it seems like my bandwidth is I can implement procedures in 2 to 3 months generally, and as long as the business culture buys into them, they can function without direct intervention pretty good going forward. More like a monthly review, then it's like make these changes,
Yeah.
And hopefully you get to a point after 6 months where you're like, yeah, no changes, keep going.
Nice.
Just keep growing sales, So
you can do a few of them at a time.
Yeah, I think my bandwidth, if I was only focusing on that, I wasn't doing my own stuff, I could probably take on 4 businesses a year, I would assume.
It's impressive.
Maybe that's reaching for the
Hey,
stars.
you're a good multitasker. I'm not as good. It's hard for me.
Well, I like to. Well, and like I said, you have to implement people into that system that are going to just do.
Yeah. Again, number one is hire good people.
Yeah. Right. No, absolutely. But it's fun though, man. I mean, we're talking in my We Are the They group. We're talking about investing right now. So people ask me what I think, which is always worth what they paid for. It's all free advice, right? But I'm just like, if anything right now, I'm into small, but not small businesses, but medium to large size businesses. If you can get into a business and really affect it and change some things and bring your expertise in and add some verticals to it, or some sales distribution channels, like those are the businesses that you can really kill it.
Yeah.
Can you kill it if you got an 8.5% interest rate in real estate?
I don't know.
I don't think so.
I think everybody in real estate made money in the last decade.
Yeah, but well, let's see what happens in the next 3 years.
Yeah, well, I wanna, we'll see who's good over the next few years.
I keep on getting pitched on real estate deals, apartment buildings, and I'm at the point now where I'm just killing every one of them. Like, nope, no thanks, I don't want to do real estate. People are like, really? I mean, it blows people's minds, right? Like, real estate, wow. And I own homes, I got commercial real estate. I'm holding it, right? I've owned it for a while now because I've got 3% interest rates, 2.5% interest rates.
Locked in.
Lock it forever.
Yeah.
But someone off the street trying to syndicate a deal to me or something insane, it's just like there's just not enough meat on the bones. Your deals that you bring to me, I'd way rather invest in.
Yeah.
And they're also more exciting.
That. Yeah, it's a lot more fun to invest in tech startups than it is to invest in real estate.
Yeah.
I mean, I don't think you should put all your money into any one asset class, but any good portfolio's got a mix of everything, and depending on your risk tolerance, more tech versus more real estate.
Yeah. And another thing for me too, my investor profile, they all have their own stocks. They made their money. They have their real estate. They're not coming to me to be like, hey, how many more apartment buildings can we do? They're gonna. Some of them have teams that do that.
Can you help me make 10% every year? Yeah.
Yeah, exactly.
It's not that. It's
no. They want to come in. They want to see deals that they can't get into. Right, which is really that's another big strategy, right? Is to get good deals that people can't see. I like to say medium risk because I would never say I would put money in high risk situations because I'll mitigate the risk down by underwriting it.
Yeah.
And then just kind of execute and see what happens.
I like it, man. So, you're in some really good companies.
Oh, thank you. Yeah, it's fun. Yeah, actually, my last one to kind of wrap up. I just invested in a meat packing plant. And I was so freaking PO'd, dude, because it was a $35 million raise. I put the last $200,000 in.
Oh, man.
Right? And there was only $400,000 left when I heard about it. And I was like, oh, and it would do it. So I literally like 2 weeks ago, And they open like December 1st, and they're going to start cutting divvies the freaking first quarter. And I'm just like, and they're already above capacity. Huh?
Yeah. Again, meatpacking plant. Yeah. Like, who has access to invest in a meatpacking plant, right?
Oh yeah. And 80% of the people that invested in it are the farmers and the cattle ranchers that are sending their meat there. Dude, it was the biggest no-brainer deal I've ever seen. I was just like, poof, you know. We'll talk about
where you at, man? Why don't you send it to me?
I funded myself. I was like, that is personal money going in. No, if it would have been at the start, for sure, we would have had a conversation about it. But here, honestly, I think they're going to do another one because they raised like that. And
why not?
they did. It was a $70 million raise, so they did 35 equity and 35 debt. So who knows? Maybe their debt will get expensive. We'll just go buy out some more debt.
Yeah.
So kind of fun.
Look, these kind of businesses are way more fun.
They're way more fun.
Yeah.
Plus, going up there would be fun too, right? You put your freaking boots on, walk around, act like you know what you're doing.
Yeah, wear your cowboy hat.
Yeah, wear your cowboy hat, have some fun.
Yeah.
So, well, hey, my friend, you got a phone call here coming up.
Yeah, here in a little bit.
We got to get on. So, I need your best 2 minutes of advice for all my listener.
All your listeners, all your listener, yeah. Just grandma. I saw you did the podcast with her recently. Yeah. Man, I'm not gonna claim to be some kind of wise sage over here, but I feel like good things happen to good people. I mean, if you try hard and you treat people the right way, like karma's real, and people matter the most in everything. Your relationships with people are what endures. Just treating people with respect, helping people along the way. I've been helped by a lot of people, and I try to return that favor to others. And I at the end of the day, like, making money's fun, and provides a lot of cool things that you can do, and a lot of ways you can help other people. But the relationships you make, that I feel like that's what endures, and that's what makes you thrive when you're older. I mean, we're only going to be actively working and investing for so long, and then you fall back in your relationships, whether that's with your kids and your spouse or the friends you make along the way. Like, that's the thing that is most important to me. And life's not transactional. Life's very much a long-term relationship game.
Yeah. No, I couldn't agree more. I think when I turned 40 last year, I just barely turned 41, you know, like I really started leaning on that. It's like, hey, I've made some good money. I've got to start transitioning into more of a investor role, kind of, you know. I promised my wife by 50 I wouldn't operate in any businesses.
Good luck.
Which, yeah. Well,
I think you're an addict.
We'll see. I'm absolutely an addict. So, but you're right. I mean, it's about the relationships that you have. And that's what, I mean, for me, that's what brings me happiness and joy, right? You know,
yeah.
Friends and, you know, investing buddies and business friends and, you know, like high school friends. I mean, it's just this huge hodgepodge of just people I know and people that I like. And the good thing for me is, I think you're probably the same, right? I only talk to people I like.
Yeah.
Like, I'm so done.
Yeah, life's short to deal with jerks.
Yeah.
Yeah.
Yeah. But, well, thank you, my friend. Thank you for coming on the podcast.
Man, what a treat.
Yeah. I'm glad this is your first one.
Thanks for having me, man.
Yeah.
It's cool.
Cool. Thank you very much.
Thanks for listening to the President McCormack Podcast, brought to you by McCormack Foundation, Zaxton Fund, ADP Lemco, and Professional Floor Systems. Make sure you subscribe to the podcast and keep up with Mark on Instagram @President McCormack.